What do you think? We're getting a little bit of a reprieve for the dollar, but long dollar must be the trade still, right?
Yes, I think so. If we work on the assumption that the US data is still going to remain relatively robust as we continue to do so, and certainly that contrasts with elsewhere, as you've just been identifying, the Eurozone data has been fairly awful of late and doesn't look as though that's going to turn around anytime soon. And the real presumption of divergent monetary policy action in the US compared to elsewhere, whether it be the BOJ, whether it be the ECB, also continues to favour broadly long dollar policies. I think it is a case of just looking for any short-term dips to provide some better levels to get back in and reload positions.
And you still selling the euro?
Yes, I think it has to be the case that the path of least resistance is for a lower euro. The one caveat to that I would say is that if we were going to see a bout of extreme risk aversion, then those currencies with current account surpluses will see some support. So, of course, the euro does see a little bit of a benefit in that perspective. But I think overall, the data story, the fundamental backdrop, the questioning of Germany and its German policy, which is pursuing for the rest of Europe, I think continues to underline short euro tendencies. And I think we will see another crack at that 124 threshold.
All right. I mean, you've been bearish for a while now. Crack at 124. 6 months, a year out. What are you saying now, Jeremy?
Well, I think we will still see it lower through 2015. I think, though, the case is that we're not necessarily anticipating a break through the sort of 120 threshold. I know there are a number of people who, in the wake of recent news flow, have been really rushing to trim and aggressively cut some of their euro-dollar forecasts. We're not doing that largely because, of course, some of the justification that we had for a cheaper euro have largely been fulfilled in the assumption of an expansion in the ECB's balance sheet, for example, and increasing action from the ECB in terms of monetary policy. So, yes, we think it will go lower. I would be surprised if we were to see a breakdown through 122, because, of course, even though we expect a relatively early action from the Fed and more from the ECB, I think a large part of that is already in the price.
And finance ministers in Luxembourg today, clearly Europe is a worry. Clearly there's a focus on Germany as well as France now.
Yes, that's right. And I think that's interesting in the context of some of those comments that Mr. Draghi made last week in Washington. He was talking about those that have the fiscal room to do more should do so. And of course, even if he didn't implicitly or explicitly say it, implicitly he was arguing that Germany should do more in terms of their fiscal position. Now, of course, Mr. Schäuble et al. Are not particularly keen on that sort of scenario. It'll be interesting to see whether that fault line develops further as far as the Eurozone finance ministers are concerned.